Detroit. Okay, so if you're in Detroit, you're only able to attract talent in the auto industry, while Silicon Valley, was placed to attract talent in all sorts of different industries. Okay,
But
but they
there's a
all
reason.
have sort of something in tech in common.
Yeah. But there's a recent phenomenon, Sheridan. It appears that there is an outflow. I don't know, not specifically Silicon Valley, but California in general is losing a lot of people. They have been losing people for the last 7 years. Some of
Right.
the tech companies moving into Austin, where you sit. Um, so what is the phenomenon? This is sort of a kind of contemporary phenomenon. How do you explain that?
Okay, well, again, talking about California, I mean, there's a lot going on in California. I don't want to talk right now about things like taxes, which is one of the reasons why we're seeing people migrating out of California and moving to Texas. But let's just sort of stick to costs and talent. Okay, so at some stage, um, it's going to be very costly to operate in one of these talent hubs, because if everybody wants to be there, it's going to become very expensive to do business there. Okay, so that's sort of what's happening in Silicon Valley, and that's actually something that we see in our data. Okay, in our data, we're seeing that these firms in these locations, we're seeing that their market values are going up a lot because they're innovating, but at least temporarily, their profits are not increasing nearly as quickly because the cost of doing business gets higher and higher.
Hmm.
Okay, so from what I'm seeing here in Austin is that it used to be the case that if you were a programmer in Silicon Valley and you're a pretty good programmer, a lot of these guys are making $300,000 a year. And so the amazing thing is that you could be making $300,000 a year in, Menlo Park, and you still can't afford a place to live. You can't raise a family in Menlo Park on $300,000 a year. So a lot of those guys are wanting to, move to Austin, okay, where the cost of living is much lower. Okay, now what was happening historically was that if you want to be really at the top of your game, and these are the really, really top programmers, the guys that are making $1 million a year, okay, you need to be in Silicon Valley. And if you're, one of the lower level programmers that aspires to be at the top level, you want to be in Silicon Valley. Okay, so what we're seeing just in the last 1 to 2 years is kind of a flipping where a lot of these top guys are basically moving to Austin, and then you're basically seeing Austin becoming a talent magnet in the same way Silicon Valley was. Okay, again, it's the same virtuous circle. Austin is attracting a little bit more talent. As Austin attracts more of this talent, it makes it more attractive for more people to come to Austin. And then you're seeing a lot of migration from California now to Austin as a result of that.
Yeah,
Okay.
I was really interested in. So you talk about your profitability of the firm, a firm profitability declining for a variety of reasons. The total value created is shared by employees, shared by real estate, whatever the costs go up. And
Right.
so the firm's profitability declines, let's say in Silicon Valley, but their market value continues to climb. And so it has to be that the market expects these firms to create tremendous amount of future value
Right.
for whatever reasons. And this is not in the paper, but I want to get your perspective on this, Sheridan. Is it because there are firms there that have monopoly power? Is that where the value is coming from?
I think they have to have some monopoly power. Otherwise, all these profits are going to be competed away. And again, I think a lot of it is investors looking into the future. So you're looking at Amazon, and Amazon is not making high profits right now, but everyone thinks that Amazon is positioning itself so it's going to make huge profits in the future. And I think you're right. That has to come from monopoly power. Okay, so again, we're basically rewarding these companies because we think they're innovative. And in some sense, innovation means that I'm going to do something that's relatively unique. And if it's relatively unique, I'm going to have market power.
Yeah, it's a slippery slope in the sense that if you look at the big companies in Silicon Valley, they are big. They're truly big.
Right.
And so one could argue that monopoly is coming from scale. Now, they were innovative companies at some point in time, and scale now got them to a position that they have huge monopoly power. And one could argue, I don't have any data on it, but one could argue that almost all the value now is coming from scale-based monopoly, not innovation. If that were
Okay,
true,
but it's from prior innovation.
prior innovation, yeah.
Yeah.
So if that were true, what would be sort of the market dynamics going forward? So suppose there is regulation, let's say, people are looking at these firms and saying they look like utilities rather than technology companies. Should they really be regulated? Yeah, if something like that happened, do you think Silicon Valley is at risk?
I don't think so. I mean, Silicon Valley may be at risk just simply because California is being poorly run and it's just gotten too expensive to do business in Silicon Valley. I think in terms of regulation, Silicon Valley, we're talking about regulation of Google and Facebook and Amazon and maybe Microsoft. We're talking about a small number of companies. I think what's basically making Silicon Valley and Seattle so relevant going forward is that that's still the place to be for a younger, innovative company. And they're still going to want to be in those locations, I think.
Yeah. So I guess for a young, innovative company, there are two needs. One are employees, talented employees, another is capital.
Right.
And so I guess there is also a positive network effect on capital. Venture capital funded firms, the amount of venture capital coming out of California and Boston are significantly higher than any other part of the country. And
Yeah.
so if you're starting a firm, you say, I'm going to go to places where there is capital plenty available.
I think there's absolutely no question that the capital is available in California, Silicon Valley. I'm seeing people in Austin saying that's not as big a disadvantage being in Austin as it used to be. That for a lot of these startup companies, they don't need huge amounts of capital. And so the point is, if I need to raise $5 million and I have a good idea, I could do it in Austin as easily as I could do it in California. That didn't used to be the case. It used to be the case that I had to be in California, but that may be changing.
Yeah, I mean, the paper is really about geography, location advantages.
Right.
As we look forward, and COVID-19 might have accelerated this, aren't we making geography irrelevant for the future?
I certainly wouldn't say it's irrelevant. And I can tell stories for how it can make places like Seattle and Menlo Park even more valuable than before. The story for the advantage that technology is going to have on a company like Apple or the smaller companies in Silicon Valley is that it used to be the case that the cost of doing business in the Bay Area was incredibly high just because the real estate was incredibly high for my employees. So I have to pay this guy $400,000 a year because he has to spend a couple of $1 million to buy a house, and it's just very expensive for him to live there. Or either that or commute for 2 hours. I think what we might see in the future is people are going to live farther from where they work, but come in just 2 or 3 days a week. And that's going to make it easier to continue to do business in these very high cost areas. So it can go either way. There's a huge advantage of working in a place like the Bay Area if I'm in the tech industry, because I can hop from job to job, and that's got to be very valuable for me as an employee, that I'm not basically stuck in this company where I can't move and I have no bargaining power with my employer. So I don't think that's going to change when people are doing more work over Zoom. I think that's going to continue, and doing more of my work over Zoom makes it easier for me to live in these higher cost areas because I can live farther from where I work.
Yeah, that sounds to me that is some sort of a critical size issue. So if I have 100 companies in one area as opposed to 10,
Right.
and I'm going into the 100 company place, I have a higher option value in terms of switching from one to the other.
Right.
And so once you get to a critical size, I guess you have a higher probability of maintaining that size or continue to increase that size. And that's what we are seeing in the data, right? I mean, the more dominant cities become more and more dominant
Right.
over time.
Yeah. I mean, again, what you're saying is I would like to be located in a liquid labor market. It gives me more bargaining power. It gives me, I'm going to learn from more people that I'm meeting. I think there's big advantages of that. And I don't think that's going to change. I don't see that sort of in the post-COVID world, the fact that we can do all this communication over Zoom is going to kill off these cities.
Yeah, I mean, it will be a very interesting policy question for, let's say, a small city in the Midwest. Is say, how do I start this engine? From a fairly low position. Is
Right.
there a magic formula that that I could utilize? Once you start it, you have a lot of positive network effects. But what you're saying is that generally you need good weather, generally you need good educated people, you need reasonable amount of capital, and so on. So I guess the first thing you cannot do anything about the weather, but
Right.
education you can do something about, capital you can do something about. So is there sort of a way for a small city to jumpstart its ecosystem somehow?
Well, it seems like you need sort of a seed there to start. So if you're asking me, is there anything that Boulder, Colorado can do? I think the answer is probably yes. I could see Boulder becoming a very important tech hub if they want to do that. If you're asking about Wichita, Kansas, I think that's going to be very difficult.
Because of low initial conditions to start with, right?
You don't have the initial conditions. You don't have a good university there. Yeah, you see, it's not a city where you can imagine a lot of immigrants moving to.
I was also wondering, Sheridan, I don't think this is the right way to think about it. When you have a lot of space, like in the Midwest, it is a little bit of a negative effect in the sense that when you have a lot of space, you gravitate toward, let's call it low value industries, because to run transportation, to run heavy manufacturing, you need a lot of space.
Right.
And so if you don't have space, you cannot do those industries. You have to do biotechnology or computer tech. Do you think places like Chicago is suffering from space?
I haven't thought of it that way. Again, I think Chicago and Illinois as a state just has a lot of problems, political problems. They've, They've been running a huge deficit. They've got bad weather. There's a lot sort of that's causing problems in Chicago, and I don't see the abundance of space as being a big problem for them.
And you mentioned taxes. So taxes is something that cities can definitely think about. And so Austin clearly has an advantage
Right.
in the tax arena, right?
That's definitely true. That's definitely true. I mean, again, that's just sort of a lucky thing, is that we've got an oil industry in Texas that pays a lot and pays for a lot. And as a result, we don't have a state income tax. And that definitely gives us an advantage over California.
Yeah. I know that you looked at data in sort of two different regimes, 1995, sort of a break point between the two. Did you see any difference in the pre-95 and post-95 data?
Oh, yeah, we think that the mid-90s is sort of a very important break point. And that's kind of the focus of how we were thinking of things. You may have remembered a book by Thomas Friedman that was written around 2002, I think, where he basically says the world is flat because of improvements in technology. We can live anywhere, and I can basically live in Montana and telecommute to Silicon Valley. So, being in places like Silicon Valley aren't going to be particularly important. Okay, so what we do is we look at market to book ratios and stock returns over time, and we see there's a big break around 1993, 1994, 1995, where the firms in these particular, what we call glamour cities, do extremely well over, the late 1990s. And again, our interpretation is over that period, it looks like the world's not becoming flat. The world's becoming what they say spiky, in the sense that being in the right place becomes especially important. Now, it's possible, and we talked about this a little bit a few minutes ago, that Thomas Friedman's right, but he was just way too early. And telecommunication technology 20 years ago really wasn't that good. Now it's pretty good, and maybe the world will become flat going forward. But there seem to be, big advantages of proximity. There's big advantages of being in a thick labor market where there's lots of firms that could be hiring you, and basically being able to hang out with lots of other smart people that are doing similar things. And that seemed to have gotten a lot more important than the 90s. And we've seen no evidence that it's become less important over time.
Yeah, but so you talked about profitability of the firm, not rising or flat or even declining in these environments. So a lot of the values competed away to employees and real estate and those types of things.
In the short run. In the short run, but we think in the long run, these firms are capturing them a big part of that benefit.
In the stock prices.
Well, the stock prices are basically reflecting the long run.
Yeah.
And so the stock markets say these guys are going to capture that benefit in the long run.
Right. Yeah. It's a nice situation to be in, because the raw materials, people and talent are getting heavily compensated, and so that flow is not declining.
Right.
And so the firms can continue to tap onto that. But they're not really showing income statement numbers, but the market doesn't really care. It's basically saying, forget it, you keep losing money like Amazon for 10, 15, 20 years, and the stock price still continues to climb.
Right. I mean, the market could be wrong, but that is what the market is saying.
Yeah, yeah. Do you see in the data, when did you stop the data set?
I think it was 2016 or 2017.
Okay. Did you see any other breakpoint post 1995? Things are sort of normalizing or doing.
Well, we look carefully to see if there's any reversal of the trend. and we see no evidence of reversal. Okay,
No.
so the firms in these glamour cities, their stock prices go up a lot in the late 1990s, regardless of their industry. So this is industry adjusted. So on an industry adjusted basis, firms in these cities do extremely well. And even though the tech sector reverses after 2000, we see no evidence of a reversal for firms in those particular cities.
There is one other thing that is sort of positive network effect, and that is when the stock prices do really well, you're creating millionaires.
Right.
And those guys go out and start their own companies. So there is sort of a underlying force that keeps creating new companies because you're also creating very wealthy people.
I think that's true. Again, the formation of new businesses seem to be very much concentrated in these small number of cities.
Why do you think, so if the tax effect that you mentioned between Texas and California is so skewed in favor of Texas,
right?
Why do you think these companies not taking advantage of it? I mean, wouldn't they at some point say, I think Tesla did move their HQ to Austin, didn't they?
Right. Oracle's moved to Austin. Tesla's moved to Austin. Charles Schwab, a San Francisco company, moved to Dallas. CBRE, the biggest real estate company in the world, they were located in Los Angeles. They've moved to Dallas. So we're seeing quite a bit of migration of firm headquarters from California to Texas. So it is happening. There's no question of that.
Is the HQ migration somewhat cosmetic from a sort of a tax advantage, financial advantage? Are the people staying back in California? Is that what's happening?
I think you're seeing a lot of people staying in California, but we're seeing the growth in employment in Texas. Okay, so Oracle, I'm sure, has more people in Silicon Valley than they have in Austin, but I think they're hiring a lot of people in Austin, and I don't know if Austin will become bigger than California, but the growth is much more in Austin than it is in California. And then you're seeing like Facebook. Facebook is, not moving out of Silicon Valley, but Facebook is adding thousands of new employees in Austin. Google is adding thousands of new employees in Austin. So there's a lot of migration out of California into Texas.
You were looking at sort of the HQ location as sort of the primary driver.
Yeah.
In a very distributed company, why is the HQ that important?
Okay, that's a very good question. Because a lot of these companies, they've got workers all over the world, not just in their headquarters. Our hypothesis, and I don't have firm data to back this up, but our hypothesis is that the most creative people and most important strategic thinkers of the company, the people developing the new products, sort of the leadership of the companies, for the most part, are sitting at the headquarters. And so that's our idea, is that you want your creative people basically located in the most creative locations.
Right, but if those people are senior creative people, they might be coming from all around the world.
Right.
And so then it's sort of counter to the location advantage in the sense that if I'm going to go to Berlin and New Delhi to hire talent, it doesn't really matter if they're sitting in Silicon Valley.
Well, the point is, I can better attract them to my company if I'm in Silicon Valley. Okay, I mean, the firms do the other thing as well. I had a panel once with CFOs of major companies asking them various questions. One of my questions was, how do you think about your overseas locations? And the answer that they all said was, we moved to these overseas locations because we want to attract the best overseas talent. Okay, so one of the companies said we opened up an office in Beijing, not that we needed to be in Beijing for business reasons, but if we wanted to attract the best talent in China, we should be in Beijing.
Yeah, so if my HQ is in Silicon Valley, Sheridan, if I understand this correctly, I could then say to my people in different parts of the world, I can promote them the best of my employees and give them an incentive to move to Silicon Valley. So I can give them weather, I can give them education, I can give them all sorts of things, right? So that is an attraction that I can sell. Is that one of the primary drivers?
I think it helps. I think it definitely helps. So one thing that I've looked at just very recently is H-1B visas. And these are visas that are given to individuals that are very highly educated. And you see that a very, very large percentage of the people with H-1B visas are basically going to 3 different cities. One is Silicon Valley, 2 is Seattle, and the 3rd is New York because of the financial industry. Okay, so you're not seeing a lot of people with H-1B visas taking jobs in Chicago, for example.
Yeah.
So yeah, the location seems to matter for attracting the best foreign workers, I think.
Right. And New York doesn't have weather either, but there has to be other things there that might be.
Well, if you're European, you want to be in New York. I think if you're an Asian, you want to be in California more. But
right. And you mentioned Washington, D.C. in the paper, if I remember, Sheridan.
Right. Washington has become attractive as well.
Yeah. So what is causing it? Is there sort of a nugget of an industry in Washington, D.C. that is it's defense or something like that?
Again, I can't answer that. I don't know Washington, D.C. that well. It's just that we've noticed that you are getting, some successful firms in Washington, D.C. Again, it's an very educated city. It's impossible to take out the influence of being in the capital. For a lot of firms, there's some benefit from that. It's not something I've studied.
Yeah. So at least on the surface, if you have good weather and you have a big university, you actually have a pretty good, sort of initial foundational elements that you can start the engine with.
Yeah, and I guess what you would say is a lot of it is just luck. The fact that, Hewitt and Packard were from Stanford and they started their company. The fact that Stephen Jobs was born in Palo Alto. I guess there's some random luck there. It's very difficult to tell.
Yeah.
I mean, the one thing that we do know is that once you've got these initial conditions, the thing can grow. There's a feedback effect.
Yeah, so from a policy perspective for a city, you can aid that with taxes, perhaps. You can aid that with sort of promoting education at some level, things like that, right? There are things that cities could do to restart. Yeah.
Now, again, that's something that, all over the world, the cities are asking that question. And they all think that they can do something like that. But very few cities have been successful trying to replicate Silicon Valley.
Yeah. It's also a zero-sum game, isn't it? I mean, there are only so many people.
Right.
And so once the race is well established, it looks like, Sharon, the race is well established. There are 2-3 winners in this race, and so far ahead, it's really difficult to catch up in a zero-sum game.
Yeah, but I think we are seeing some of that. I think we're seeing the talent dispersing now. I think we're seeing here in Austin, we're seeing Austin getting a much greater share of that kind of talent. My guess is that Denver Boulder is getting more of that talent. I think we're seeing Nashville getting more of that. So the talent is getting dispersed again. Again, I don't know how that's going to play out, but it's going to be something interesting to watch.
So in conclusion, Sheridan, do you have some sort of a federal policy ideas? At least intuitively, it feels to me that a few cities, high concentration of few cities, from a country perspective, may not be optimum. If that were
I agree with that.
okay.
I've seen research papers that claim that we've got all these constraints on growth in Silicon Valley, and that the GNP of the country would be much higher if we relaxed those constraints and allowed Silicon Valley to triple in size. Because of that feedback, you get 20 million people in Silicon Valley, you're gonna get all this great innovation, and we'll have nirvana as a result of that. I'm not convinced that that's true. I think it might be better to have, multiple tech hubs.
Yeah, I was going in that direction. So I was asking, is there a policy that says, can we distribute this kind of heavy concentrations in 2 or 3 cities in some way across the country? Is there some sort of a policy that you could pursue?
Yeah, that's a very good question. And again, there's certainly not a consensus that that's a good thing to do. But the question is, maybe it's a good thing. And then the question is, how we want to think in terms of tax policy. And again, yeah, that's a good question. And I don't have a good answer for you.
Yeah, I was just peripherally thinking, one idea might be, you get a BMW or a Mercedes to kickstart something somewhere. I think so, things like that been tried in Kentucky and elsewhere, right? But it hasn't really gone a lot further, I think.
Yeah. So an interesting question that I thought about when Amazon was looking for a second headquarters. And so the question was, what was Amazon looking for? Were they looking for a place where it'd be low cost for them to operate, or would it be a place where they could attract talent? As it turned out, they chose the 2 most expensive places where they could locate. One was New York City, this Long Island city just across the river from Manhattan, in Queens, and this Crystal City in Virginia, which was a suburb of Washington, D.C. 2 very high-cost places to locate. And why did they choose those places? It's because these are places where they could attract the talent. Now, from the point of view of public policy, I could see that the U.S. government could have subsidized them to move into Detroit. I think they could have done more good going to Detroit, where we could have said, okay, Detroit has all this infrastructure, it's underutilized, it's a city that needs some help. Maybe we should basically get Amazon to move into Detroit, and the federal government would subsidize that with a small amount of money. That goes along with your story of distributing the talent rather than having it too concentrated in the same places.
Yeah, if I understand it correctly, Sheridan, they had some sort of a competition between cities. Cities were bidding for getting the HQ, right? And they had to basically come up with tax incentives and so on. And
right. So the whole problem with that is, the rich getting richer. The cities that are rich can outcompete the cities that are not rich to bring in Amazon. From a public policy perspective, that may not be giving us the right answer.
Right. Yeah, that makes sense. Yeah, excellent. This has been great, Sheridan. Thanks so much for spending time with me.
Yeah, this is interesting. Thank you very much.
Thank you.